And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for January 26th. Today, as always, we're going to take a look at where the broader markets closed and beyond. Take a look at some of the sector rotation that is potentially shaping up as we see newer areas move to the forefront. And then also some of the headline news that drove price action last week. We did get some key economic data, and then of course earnings were a big driver as well. Last up is viewer question of the week, and that question is all about how to trade stocks that gap up in price. So we'll get into some examples there that are highly relevant and recent with their gaps up. So first up on the economic data front, we did see that Q4 GDP came in quite strongly at 3.3%. In turn, fears of a recession were pushed back. That was earlier in the week. And then later in the week, core inflation data showed that personal consumption expenditures slowed so that core inflation number is now at 2.9%. So that is certainly a relief. We didn't see a huge response to that. Interest rates remained relatively flat, although they did remain elevated. I'll share a view of that with you as well. We also did get data that new home sales surged in December. That did impact the stocks in that area, but only a select few traded higher because there was weak results from one of the key members in that new home building group. Also, next week, be aware that we are going to get very key employment data for the month of December. This is another key metric for the Federal Reserve. They want to see employment and in particular wage growth to slow because in turn, increased employment is increasing spending and hence inflation. So that data will be impactful next week, as will reports of earnings, quarterly results, as well as forward growth prospects for key names, Alphabet, Meta Platforms, Microsoft, and Apple, all due to take place next week. From here, let's go ahead and take a look and see where did the markets close for the week. And here we are with the daily price chart of the S&P 500, and this index advanced about 1% last week. You can see that uptrend does remain in place. We have a positive relative strength indicator and then also MACD, both signaling bullishness as this uptrend remains firmly in place for the S&P 500. From here, we'll take a look at the underlying sectors in the S&P. These are the 11 sectors. 2-month daily price chart view. I've added a relative strength indicator, and they're sorted in descending order so that those relative outperformers are up here at the forefront. And this is a move that is very mild. It's not whippy. It does allow you to really key in on potential rotation if you exercise this every week, which I do, so be sure and come back and watch each Friday as we take a look at this as well as underlying industry groups as well. But up here at the forefront, XLC, that is communication services. A lot of this is going to be internet related stocks. And certainly one of the biggest movers last week was earnings driven. We'll take a look at Netflix. That's one of our examples of how to trade a stock after a gap up. The stock was up 19% last week. So big mover, helped this group progress higher, as did an advance in Alphabet, which outperformed the markets last week. Next up, second on the list are financials. And this is a sector that had been languishing down in this weaker quartile for quite some time, and it's continuing to progress up to the stronger forefront here. XLF, you can see the move over the last week plus is pushing this sector out of a flat base formation into an uptrend. I'll share with you an area where that strength is shaping up, and it is all about bank stocks. We'll take a look at an ETF for that. Also up here at the forefront is technology, receding a little bit. This week, the group did perform in line with the broader markets. And we can see that it is still in a very nice confirmed uptrend with that RSI MACD in positive territory. Heavyweight names in this sector are Microsoft and Apple, and they were market performers as well last week. Now, as we move through, I want to share with you one area that was the clear winner last week, and that's energy, up 4.8%. We'll take a look at the price of oil as one driver. A lot of this having to do with geopolitical strife and then a lack of oil production, a drop. So that's really given that particular group a boost so that it is now moving from this lower quartile up further toward the stronger areas. And then one other area that is down here and still languishing is XLY, but one of the big reasons here is mega cap name Tesla down 14%, dragging the group lower. Amazon, another big heavyweight, was up about 2.5%, but in the end, we are seeing continued weakness in this consumer discretionary area. These companies, many of these retailers in this group, are due to report their earnings later in the earnings reporting period, so we may not see vibrancy for some time in this sector. So let's move beyond the 11 sectors and take a look at some of these underlying industries within the sectors. It's critical to be able to really fine-tune your research, where you're going to be looking for potential candidates, and then, of course, make sure that you're not in those weaker areas of the market. So first up here, again, using that relative RSI in descending order, you can see software IGV is the ETF that I use. Not a big outperformer. It was up 1.5% last week, but there have been bright spots remaining. Now, this is unlike in technology. Semiconductor stocks did get hit, certainly into the close today, down almost 3%, all about earnings from Intel, which was down about 11% on the day because of their reduced growth outlook going forward. I talked about XLF financials up there in the forefront. Here is KRE, and it's not the most attractive chart, but it is constructive. The ETF has traded and closed above these moving averages. We have a positive RSI. See if we can get that MACD black line up through the red. However, this is a broad-based ETF. There are individual names beneath the surface that are exhibiting strength. And also of note was a move into transportation stocks last week. This is TRAN, the Dow Jones Transportation Index. A lot of that strength centered around earnings. Again, it's going to be airlines and then also select rail stocks moving higher due to stronger than expected earnings reports. And down here in this lower quartile, I talked about consumer discretionaries and their weakness. Here we are with XRT, the S&P retail ETF, and it actually is firming up. What I'm meaning by that is that the losses have been stemmed and the group overall is attempting to reverse its downtrend. We now have a positive RSI. I'm on the lookout for that black line up through the red to signal a new uptrend, which would be ideal. From there, of course, individual candidates can be reviewed. And one last area of note is the movement into small cap stocks last week, up almost 2%, clear outperformer, almost double what the S&P 500 did. And this is what we want to see. We want small caps to bubble up and participate in the uptrend in the markets because it will help broaden out, but also a move into small cap stocks does signal investor confidence. These smaller companies are going to be more volatile and more susceptible to any talk of a slowdown in the economy. So here we are with IWM, the Russell 2000 ETF. You can see that it is now trading above these moving averages. Again, another area where we're on the lookout for that black line up through the red to signal a new uptrend with that RSI up there above that net neutral 50. So this is another area to keep a very close eye on as this group potentially continues to advance. From here, I talked about the concept of trading stocks that have these gaps up on earnings. We have been seeing that certainly this year to date. Also, we are seeing names that are gapping up in response to positive talk as far as growth, not necessarily just on earnings. So when we are looking at Netflix, I'll go ahead and mark up this daily chart and highlight why after even the close of the day, this stock was viewed as quite constructive. What I wanted to highlight here is this base breakout that took place ahead of the earnings release. Also very important is the fact that we had very elevated volume here on that gap up, and that means institutions want in. This black line up through the red with that MACD crossover, very bullish taking place. Also, the fact that it is still relatively low in its range upon that reversal is good news as well. And we can see the stock has advanced higher. From here, however, for more refinement, I'm going to take us down to an intraday 60-minute or 1 hour chart. And from here, this is going to be really helpful for those of you that are watching pre-market activity or stocks just before the open. You'll see with Netflix, I'm going to go ahead and mark that up because the news did come out the night before. There was certainly anticipation that it would have this nice gap up, and we did in fact experience that within the first area. From here, we will get into a 15-minute for even more refinement. But what I did want to highlight to you is after that big gap up, we did have that RSI get into an elevated position above 50. And from here, you're going to want to pay attention to these moving averages. This is a 5 and a 13-hour moving average. And as long as Netflix remains above these moving averages with the momentum above 50, I would expect further upside from the name. If we see this MACD crossover, that is not going to be a sell signal. It more simply is going to signal that this sharp uptrend may be decelerating. But again, if we get a close below this 5-hour simple moving average, coupled with an RSI below 50, near term, the upside potential is going to be negative. So you can see how this hourly chart can be really quite helpful as far as keeping you in the stock so that you can participate in a multi-day rally for the stock. From here, let's go ahead and take a look at an hourly chart of a stock that has had a couple of gaps up, and it's very much news related. We're looking at a marked up chart of Advanced Micro, AMD, and again, this is a name that experienced a gap up on the open. This is a 1 hour price chart. I'm taking us back to early December when the stocks moved above the 5 and 13 simple moving average. In line, we had that MACD crossover and the RSI moving into positive territory, which in turn you could have then participated in about a 2-week rally for the stock. Now, you'll also want to be aware of what that negative movement looks like as far as a pullback. And for those of you that follow the markets closely, you'll know that at the beginning of the year, we saw many growth stocks pull back. And quite simply, it's a move below these moving averages with the momentum shifting into negative territory. On January 8th, AMD experienced another gap up in price and a move above that 5 and 13 simple moving average with both the RSI and MACD turning positive. At this time, we can see into the close today, AMD is now below the 5 and 13 hour simple moving averages with that RSI poised to turn negative, so that this uptrend, we had another gap up here mid-month on bullish outlooks from Wall Street relating to AMD's AI-related chips, and then another uptrend. So from here, you will want to keep an eye on this price action if you are a near-term or shorter-term investor. This 1 hour chart can be really quite powerful. That's it for this week. Everyone have a fantastic weekend. If you like what you've seen, go ahead and hit that like button. And I'm going to look for you again here next Friday.